All right, so at the we had a strategy splash at the beginning of this month, where we discussed particular strategy. Let's see. Yeah, we looked at that. Was at the beginning of this month. We looked at this. I discussed some things with us, and we rounded up on looking at a strategy we call high probability low risk HPLR. And I took time to take us through the signature trade setups for that strategy. It's been profitable this month. So anybody who stuck to the strategy, you should be up some hours, right? If you stuck to the strategy, you might be up 7 hour, 8 hour, and one of them even gave us as much as 12 hours. So that depends on how you take it. Remember, I discussed 3 methods, right? I looked at setups without bias. I looked at setup with bias. And I even gave us a B part. With the part we didn't look at is RCE. I might just introduce it briefly today. But this month, this strategy was profitable. Now, when I say 5 hours, 6 hours, it depends on what you're risking. If you're risking 1% per trade, it means you are up 6% this month. If you're risking 0.5% per trade, it means you are up 3% this month. That is 6 hours, right? If you're risking 2% per trade, you are up 12% this month. That's mean of the hours, right? And in Simply Pips, we don't brag about so much wins. We talk about hours, return. You need to have a return on your investment. That's what we'll spend more time talking about, hours, right? So let's look at the last week, and then we'll come back and look at new information. So from next week, we will be looking at the main strategy we started this Telegram group with, which is the IOF, institutional order flow. The traditional way people talk about source, breaker, order blocks, and the likes. We'll be discussing it again in the next, hopefully next month. So we usually look at 30 minutes based on this strategy, the HPLR, and for the purpose of time, I won't go through all the 3 entries like we discussed last week. I'll just go straight into what happened this week. So for this strategy, I'll be looking for this tonight. I'll be looking at trading HPLR with a trade bias, which was our second entry method. You have a trade bias, you have a trend bias, and then you trade in line with that trend. You don't take counter trends. Again, I told us that there are many ways you can determine your trend, right? So when they say the trend is going up, traditionally, you know, price is moving like this. The problem is most times it's difficult to say what your trend is. You see all of these things on YouTube. You see me draw these things. You see it on textbooks. But in real life, it's difficult to determine this, right? You need to find some key fixed rules to use. So this is Bitcoin. If I come to the 1 hour time frame and I show you this, it's difficult to say what the trend is, right? Price is basically almost random here, right? Almost random. You can't really see what it's doing. You must have some fixed rules, or else the market will decimate your account. So we created some set of rules, and then we don't know if the rules will work. After creating the set of rules, which we call a strategy proposal, we went back to history and applied those fixed set of rules to the data from history. And we discovered that if we stick to those fixed set of rules, we would have some losses, but our account has tendency to grow, right? And the tendency is above 0, meaning it has a positive edge. And then it no longer became a strategy proposal, it became a strategy, and then we trade them. So one part of the strategy is that you find a bias. So I told you there are many ways, but if you don't want to bog your head with marking up, drawing breaker, drawing structure break, drawing higher highs, just find a simple indicator and apply it to your chart. An indicator that doesn't repaint. An indicator that once it tells you buy, it will keep telling you buy, even if price is selling, until it starts telling you to sell. Once you have a non-repaint indicator, you can tweak it in such a way that it begins to tell you what your trend is, and then you can now begin to trade from that pattern, right? So I told you guys I use this indicator to determine my trend when I'm trading this strategy. So once it's red, I'm assuming I'm in a downtrend. Once it is green, I assume I'm in an uptrend. I don't bug myself doing a lot of markups. It's time consuming. And right now, having traded for this number of years, I know that spending so much time on the chart doesn't mean you eventually make money. You might just waste your time. So last year, I told everybody who cares to listen, that while you're learning to trade, go learn another skill so that trading is part-time, right? And then you can mix the two together. So this AUD-USD is bearish. GBP-USD, bearish. NZD-USD, bearish. Euro-USD, bearish. Right? BTC, bearish. So we came into this week bearish, right? And every morning I just wake up, is this thing still bearish? Yes, if it's bearish, I know exactly what to do. So I'm going to do the second method, which we call the weekly trades, right? That weekly trade. We're going to wait for price to do certain things, daily setup with bias, and I gave us two ways, right? So we will now go back to our template. We'll now go back to our template. And then, sorry, 1 minute. 1 minute. All right. So we'll go back to our template on 30 minutes, which is our entry time frame. And we'll begin to look for our setup. So our setup is that it has to take the previous day's high, and it has to be the high of the week if we want to sell. That's the only time we'll look at selling. So I've taken the liberty to add something to our template, which is the daily line. So here we see this is Friday, Thursday, Wednesday, Tuesday, Monday. So on Monday on GBP-USD, would we have sold? No, it didn't take out the previous day's high. So this is no trade. Tuesday, no, it didn't take out the previous day's high. Remember, if you were trading the order strategy, the order entry is Asia high, right? So you would have gotten an entry here, right? You would have gotten a setup here rather, but you would not have gotten an entry. There was a setup, no entry, right? The next day you would have gotten a setup around here. Again, and you would have sold for this one. You'll make money. But I'm sticking to weekly trades here. So Monday didn't take out the previous day, didn't take out Wednesday, it took out the previous day, but it was not the high of the week. This is the high of the week. This is the highest point of the week so far. It has to take out that high of the week. Remember that. That wasn't the high of the week. So on this day, we created a high of the week, but we didn't get a setup. A setup is a close below the highest bullish candle. And it never happened in our kill zone, right? That's our kill zone here from the end of that green box, that green line there. It didn't happen. So we're not in a trade. On this day, yeah, we have a trade today. So today we got a trade here, right? But it's Friday. We do want to take it around this time. But we got a setup. But by the time the trade was coming, it came around here, right? After the green zone. So would you want to take the trade then? No, you take a walk. It means we traded GBP-USD, or we monitored GBP-USD throughout this week, and there was no trade. In fact, this is the main purpose why I'm having this webinar today. To let you know that if you trade a strategy, it mustn't give you a setup every day. And if you force yourself to take a setup, you force yourself most likely to take a loss. And if you have a win, if you break your rules and then have a win, it may give you some moment like you took a dopamine, but you have just started destroying your psychology. What you are doing is that you are allowing yourself to receive gratification for being careless. You are allowing yourself to receive gratification for being indisciplined. And what that will do is that the next day you see a setup, you see a situation that doesn't really meet up with your setup, but because you flouted that rule yesterday and you got rewarded, you stand a higher chance of flouting it again. And this market is merciless. It will steal your money. You don't have to trade all the day. So this is GBP USD, no setup. Let's go to the next one. Euro USD. Here's Euro USD. So we have Friday. We have that. So this is Monday. Monday didn't even get to previous day high. I'm not taking it. But if you are trading HPLR Asia session, you would have gotten a trade on Tuesday. You should have given your 3 hour or whatever. Good for you. You made money. Right? On Wednesday, no setup. If you trade HPLR both direction without bias, you make money on this day. Right? It took out the low, it closed above, you take it, boom, you made money. This day too, you make money, boom, you make money. Right? And even if you take the opposite side, the buy will give you money. But I am focusing today on the weekly trades, just because of time, because I created some things in this slide I want to share with us. So I wouldn't want to go through all the strategy. If not, you know the way we normally do it, we would go through sheet by sheet, the daily setup without bias, daily setup with bias, then weekly trades. Then we'll put them, then we'll see which one gave us money for the week. But we don't have the time today. I have another meeting sometime past 9. So Euro USD, Monday, not the high of the week. It didn't take out the previous day's high, not high of the week. Tuesday, not high of the week. Wednesday, we got the high of the week, right? This is the high of the week. It took out the previous day and also happened to be the high of the week. But we didn't get a setup within our Q zone. We're not in a trade. We're not in a trade. Eventually, we got another high of the week, but it didn't give us a setup, right? It didn't close above the highest bullish candle after taking out the previous day's high. We are not in a trade. Today, it took out Asia, high of the week, gave us a setup. There is the trade right there, right? Unfortunately, it didn't come back to pick us. If not, it would have hit TP3. It didn't come back to pick us. If you take straight up, I told you guys how to enter straight away. If you enter straight away, you would have hit TP2, right? But that's if you enter it. I don't trade straight away. I wait for pullbacks for this strategy. There are some other strategies I may trade straight away. So again, Euro USD, no trade. Somebody will like, why didn't you catch the buys? We'll discuss that. I gave you guys one way to catch the buys. But again, we'll discuss it today. The next one is NZD USD. So here we are in NZD USD. This is Monday, not high of the week. Tuesday, not high of the week. And somebody asked one important question. How do you know the high of the week? And I gave you an answer. You wait. If it's going to be high of the week, it must take the previous day's high at least. So that you don't sit in front of the chart, watching it all the time. We coined the word in simply to call it the workability. A strategy may be sweet. It may be profitable, but it may not be workable for you, right? We said, wait for the high of the week at previous day's high. So Monday, it didn't take out the previous day's high. We are not there. Tuesday didn't count the previous day's high. We are not trading. Wednesday took out the previous day's high, but not the high of the week. Where is the high of the week? This is the high of the week. Monday's high is the high of the week. All right, Monday's high is the high of the week. I'm not trading if it doesn't take that. All right, let's put a straight line there. So here we are. Wednesday, nothing. Thursday, nothing. Friday. Now, I've not said it before, but I'll just say in passing, and it's not for everybody. If I get price getting to my high of the week by just 2 or 3 pips, I'll take the trade. But even if you want to take this trade, we didn't get a setup. The setup is that it come, takes out Asia and drop. The only guys that will take this trade will be the ones that know our last entry method, which we didn't discuss, which is RCE, retracement continuation entries. Those are the only guys that will have a trade here, because they'll wait for price to take Asia low first, retrace to retracement continuation entry, then take the trade. This is 61.8 thereabout. Take it, push, which is 1.8, sell. Those are the only guys that would have traded NU. Every other person, based on the strategy we discussed, will not have a trade. So again, 3 pairs, no trade. 1 week gone. So would you throw away the strategy? Would you? So we've looked at GU, EU. I think we've not looked at AU. So here again, we have AU. Monday didn't take. Tuesday didn't take. Where is the high of the week? Where is the high of the week? Here. Boom. Again, it didn't take high of the week. No trade, guys, in all the 5. GU, AU, EU, NU, 4 of them, no trade. Look like you wasted your time, but you didn't. You are trading based on your strategy. I trade Bitcoin. So let's look at Bitcoin. So here again, if you notice, I posted something about Bitcoin in the group, and I said Bitcoin, I use it high of the week plus 2, right? Because Bitcoin usually have Saturday, Sunday as part of it. But let's look at it the normal way you guys will look at it. This is Monday, not high of the week. Tuesday, boo, high of the week. Asia high taking. Price traded below. Boom. TP5. Close your trade, take a walk. You've done enough. So if you trade only Bitcoin, you've done enough. This is my MT4. I'm going to show you guys account history for only this week. Sorry. If I look at my calendar and I'm starting from 26th to today, so I'm starting from 26th till today. I only took 2 trades. In fact, 1 trade. This trade is exactly the same. Look at the time, 11:24, 6:11:24, 6:11:24. I took only 1 trade. Closed 1. I wasn't comfortable with price action, closed the second one. Only 1 trade this week, because only 1 pair gave me my setup. Took that 1 trade from Monday, and today is Friday, the market is about ending. I took only 1 trade, but who cares? I want to ask a question in the group, and I want you guys to put your answer in the chat box. Would you rather take 1 trade and make money than take 20 trades and lose money? Which one would you prefer? Put your answer in the chat box. Just put 1 or 20. Yeah, only a stupid person will be looking at 20. It's not a lot of activities. Are you profitable? That's what matters. That's what matters. So if everybody says, oh, I bought GU, see GU bought, you come to your chart and truly GU bought. But you look at it based on your strategy, you can't see how you would have entered. We take a walk. You can't see how you would have entered. You don't understand how you would have entered it to make profit. Take a walk. It's not your trade. HPLR weekly trades gave us between 6R to 12R this month. Cool. And the reason why it is 6R to 12R is depending on whether you go for 1:2 or 1:3. That is your risk to return. It's not bad. And like I told you guys, I don't believe in traders going to trade their own personal small 100 Naira, $100. If you are trading a $10,000 account, let me call up my account. If you are trading a $10,000 account and you do 3% in a month, you would have done, you would have done 300. It's bigger than your $100 trying to flip it. If you trade for a prop firm that gives you 80% of this amount times 0.8, you would have made more than your $100. If this was a bigger account, this could be 2004. Right? So that is that. In fact, if you traded the second entry, which is trading both ways, you still would have made money. You should have made money, right? Using that strategy. So I'll advise you guys to go back and watch the strategy again, and then know what to do. I mentioned RC. I think I'll wait till next week. I'll dedicate next week, Thursday or so, or Friday, to discuss RCE, and then we'll now start looking at IUF. Right, but let's come back to some certain things I wanted to share with us here before we close for today. I want us to discuss some psychological facts about trading that will help you to put yourself outside the noise and hype. Number one, you need to be contrarian to beat the market. In other words, in democracy, majority carries the day. In trading, majority loses. The majority has to lose for the few to win. And if you remember this thing I showed you guys the history from a particular prop firm, how that they mentioned here that they have 3,500 something people in October that paid 5,000 plus, and here they mentioned that there are only 5 traders who are on their 8th payout. Every other person lost out. These two numbers added together is already like 9,000. You're talking about only 5. Majority loses in this business. And I don't have the luxury of time to start taking you through, let me see. I don't have the luxury of time to start taking you through that. I think we did that sometime last year where I discussed contrarian principles. But I can take you here to community. This is my FX. We can go to community and go to sentiment here. This is sentiment. So this is what I want you guys to see. This is Euro USD right now. Look at that black box. The symbol is EUR/USD, action, long and short. Right? Look at the summary behind, underneath. It says 23% of traders are currently trading EUR/USD. 46% are short, 54% are long. The number of lots is 4,775 lots are buying, are shorting, and 5,671.9 lots are buying. And look at the number of positions. So we have more people buying than selling. By principle of contrarian view, there is a limit to which this disparity, the long and short, we get to, number of people longing and number of people shorting. Price will be forced to ensure that the majority loses. So EUR/USD, more people are buying than the people who are selling. If you come to EUR/USD, it will begin to have a tendency of selling to take out the people who are buying. But you can't use it blindly. You can't just go there and say, more people are buying more and start selling. No, no, no. It doesn't work that way. Right? And we're not here to discuss how to trade it. Right? Let's look at a pair like NZD/USD. Look at NZD/USD. Can you see the difference between the first pair and NU? Look at NU. Only 24% are selling. 76% are buying. Can you see NZD/USD? Can you see the speed at which it is coming down? Can you see the speed? Why? Because the difference is much. Look at NU. Only 24 are selling. You can't compare it with the first pair, which is EUR/USD. The difference is not much. Yeah, the difference is not that much. The difference is not that much. So this market is done in such a way that when many people are doing something, it will go the opposite direction. Look at 76% are buying, 24 are selling. Is that 24% that will make money? That's 76 that are buying, they will lose money. In fact, I can give you guys an assignment to go and do. Before any fundamental news, and there are two ways you can see this, right? Go look for my FX book or go look for the one for Oanda. I don't know if Oanda own is still working. We'll go and look at it, right? There's another website I dropped for you guys. Was it last year or 2 years ago? I don't go there too frequently again. But that one also shows contrarian stuff. You can go and look at it. If majority of the people are buying, there's every likelihood that that news will go opposite of the public. And if the fundamental is supporting the public, this is what it will do. And I'm sure most of you would have seen it. It will throw 1 week down to take the stop loss of the majority. That is, majority are buying, right or right. And the fundamental news is, let's say, that pair is supposed to buy. It will force through a week down, hit the stop loss of many of the people who are buying, then eventually buy. If you've witnessed this before, then you've been in trading for a while. Right? So I want you to have that at the back of your mind. So why am I saying this? The more popular a strategy is, the likelihood it will eventually fail. So stop chasing the crowd. The more popular a strategy is, the likelihood it's going to fail. There is no trade in every price movement. And we saw that this week. So because you came to the chart and you saw and you move up and you come down, it doesn't mean that there is a trade inside. If it doesn't meet your setup criteria, the trade is not for you. if you intend any strategy that wants you to catch every move, there's a tendency that you may eventually lose money. I'm not saying you mandatorily will lose money, but there's a tendency because you're trying to catch every move. From my experience, your strategy can be divided into two. It's either it is a trend following strategy or it's a ranging strategy. If it's a trend following strategy, that strategy will do poorly when the market starts ranging. If it's a ranging strategy, it may do poorly when the market starts trending. So right now, I trade short-term and long-term frames to merge them together and see if I can find a middle ground. But you will have periods where it won't work, right? There is no trade in every single price movement. I want us to listen to this guy who wanted to trade every single price movement, right? You remember this guy? He wanted to trade every single price movement. Let's listen to him.
Started going down, so I sold it, but then it started going up, so I bought it again, but then it started going down again, but I thought it would start going up again, so I bought more of it, but then it just kept going down, so I sold it again, but then it started going up again, but I thought it would start going down again, so I didn't buy it again, but then it kept going up, so I bought it again, and then it started going down again.
I'll play it one more time.
Started going down, so I sold it, but then it started going up, so I bought it again, but then it started going down again, but I thought it would start going up again, so I bought more of it, but then it just kept going down, so I sold it again, but then it started going up again, but I thought it would start going down again, so I didn't buy it again, but then it kept going up, so I bought it again, and then it started going down again.
This guy epitomizes a confused trader who believes that there is a trade in every price movement. There is no trade in every price movement. You can't be as random as the market and make consistent long-term profits. There are some people that believe that the market is not random, that it follows an algorithm. Even if I will believe that to some extent, that is not completely the truth. If price indeed follows an algorithm, every rich person will strive to know and buy that algorithm. And once every rich person owns an algorithm, it will contradict rule number one, that you need to be contrarian to beat the market. So I don't know. I believe in the interbank price delivery algorithm, but I don't believe that is what controls everything. If that's what controls everything, it has to be a very strong cult, else people will fight to get into it. And as people fight to get into it, the number of people in it will increase. And as it increases, that algorithm will break. So my hypothesis is that the market is random. If you come into this market in a random manner, the market will swallow you. You need to think different and behave in a place that is a way that is not random. And what does that mean? That means having a strategy. And what's a strategy? A strategy is a fixed set of rules by which you interpret the market. Tell yourself a story about the market. And it tells you when you should buy, how you should buy, what quantity to buy, and at what time to exit the market. If it doesn't answer everything I've just said now, it isn't a strategy. So my short form of a strategy is that a strategy is a set of rules that tells you when to sit on your hands and when to set your hands free. My definition of a strategy is a fixed set of rules that tells you when to sit on your hands or when to set your hands free. Back-to-back losses are part of the business. You have to get used to it. Avoiding losses is a sure way to incur them. Avoiding them is a sure banker way of incurring them. And I'll show you some examples here. Right? So this is one account trying to avoid a loss. This person took Euro GBP trade, right? Instead of accepting the loss, because Euro GBP will sell. It will sell. The thing move on. It will sell. It will sell. It will sell. It will sell until he lost his whole 100,000, and it's even owing his broker some money. If you don't know, if you are new in trading, you can lose more than what you have and still be owing your broker. This guy is owing his broker. You can see clearly that this guy is so worried. He's looking at his phone per second. The battery is even low. The battery is even low. The market doesn't care about you, right? It is you that will fix set rules to control your emotion. The market doesn't care about your emotions. In fact, the market wants you to be emotional so that you play stupid. That's what the market wants you to do. I'll give us another example. So these are the guys in the present mentorship class. And that video we just watched, somebody says it's a terrible place to be. I guess that's why Bishop said this challenge, they are doing a 30 days challenge right now, is for consistency and not for profitability. I have come to the understanding that the longer you have been trading, the more difficult it is to learn consistency with a strategy. Right now, I feel like I am bending myself to learn consistency. This person is on the right path to become profitable. You need to bend yourself. You need to be upside down in the market to see the correct thing. If you stand straight, you won't see it. Then somebody say, for me, I've been consistently losing, which is progress as far as I'm concerned, if he's following the strategy. I have come to understand that the psychology of a negative P&L is distinct. That is different from a positive P&L. And I agree with this statement very, very well. They are mentioning the name of one lady. This lady is a student, also is keeping her at home, and she has grown her accounts, right? And you know the funny thing, she doesn't know much about trading. So the much she knows is what we've taught her. So all she needs to do is follow exactly what we've taught her. You see, the guys that know more, they are confused. The one that doesn't know anything is following the strategy as it is and is making money. The ones that know more, once they take 2 or 3 losses, they'll go and bend the rule. Once they have a week like today, where you didn't have any setup, this strategy is not giving me setup. They change the rule. And when you change the rule, you lose. Simple. Simple is as simple as that. Right? This is another person who doesn't want to accept a loss. This one, look at. This person doesn't want to accept a loss. See. I'm going to show you why I said so. This person has been buying Euro USD. Look at the price the person entered. 1.00221. Let's go to Euro USD. Let me use this template. I'm going to put a line. What was that price? 1.00221. Am I right? Let's confirm again. 1.00221. Great. Okay. This person has been trying to buy Euro USD from here. Buy. This thing has been selling. And this person refused to accept a loss. That account has 2,484 and is in a drawdown of 2,020. Look at GBP USD. The price here is 1.14982 GBP USD. The price. $1.1498 something. 14.98.2. Same thing. Trying to buy, and the thing keeps falling when we would have had plenty sales. Plenty sales. See sales. Now price is pushing, the person will be happy. It's even possible that price is doing this so that it can go lower. Very possible. Right? So if you try to avoid a loss, it's a sure way of incurring them. When I mean avoid a loss, I mean you are trying to avoid it by not sticking to your strategy. Obviously, if your strategy is bad and it's making you lose, change it. Never think price has gone too far and must come back. You saw it on those results I showed you. The price has gone too far and must make a U-turn. It's a lie. Price can continue to move. Price can continue to move. This account here, this account, this particular account, this one, the guy has a Euro USD buy that he entered July 1st on Euro USD. If I go back to Euro USD and I go to July 1st, let me use another template. July 1st is here. This person has been selling from July 1st till now. Is how many months? This person has been insisting on buying Euro USD. Insisting on buying it. Euro USD keep dropping. Permit me to say that's a stupid way to trade. Accept your loss and move on. Right, last thing I'm going to say, win rate doesn't tell the whole story. Win rate doesn't tell the whole story. Right? I will not give us the full story of this particular account, but those in the inner caucus will know. But I'll just show you guys. This is an MFF account. This is an MFF account. See the win rate. 64.4% is the win rate. But look at the drawdown. Minus 10%. But you have 64% win rate. How can you be down minus 10? If you have 64% win rate, it means we can approximate it to, let's even approximate it to 60 for ease of calculation. Let's approximate it to 60 for ease of calculation. It means for every 10 trades, you would win 6. So why are you losing minus 10? There are many ways why this can happen, but I'll explain it in an easy way. It means this person risk to reward, what we call RRR, risk reward ratio, or risk to reward, is negative. If you remember the very first thing we discussed in that video, it's still on YouTube, is that your risk to reward should be asymmetric, positively asymmetric. You might not necessarily compound the asymmetry, but at least it has to be positively asymmetric. And that simply means if you are risking $1, what you should be hoping to get should be greater than $1. But if you are risking $1 and what you aim to get is, let's say, 50 cents, it means you need to win 2 times to cover for every loss. So if your strategy is 60%, it means you are going to be losing Because if you lose 40% of the time, if your risk-reward ratio is 1:, your risk to reward is 1:0.5, you need to win 80% of the time to at least be even, to break even. For every, let's say this 40 means you lost $40. You need to win $80. You need to win, let's say this 40% means that you traded 40 times and you lost $1 per time, meaning that you lost $40. You need to trade 80 times and win all of them to be able to cover up for your $40. So 60% is not good enough because 60% is not 80. So when you go to YouTube and you are looking for people who keep telling you we have a 60%, 80% win rate, 98% win rate, at what cost? So I've taken time to explain this, all because this week we didn't have set up in most of the major pairs you guys would have been following. I only had a trade in BTC and I took it and I got out. I'm okay. I think I even showed you guys, I posted the result in the Telegram group, but I felt guilty and took it out. I felt, let's not look like we are bragging, and it's not our nature, so I deleted it. But this account started with 5,000, and so far it is sitting at 6,700. So if we do the calculation, this is 1,724.66 divided by 5,000 times 100. That's a 34% growth in about 2 months and a half. Not bad. Not bad. And what did I trade? Exactly what we discussed the beginning of this week. Exactly what we discussed at the beginning of this week. Weekly trades. And I mixed it with another strategy I have to take counter trade. That is all. But here am I, the whole week, I didn't take any single trade. Any single trade apart from Bitcoin, right? So I just want you guys to know that that's how it is. It can be boring sometimes. If we add other pairs, let's look at that quickly as we wrap up. If you had been looking at USD CAD on a 30 minutes time frame, USD CAD, if I come back to this template, USD CAD is in a bullish trend. If you want to buy in a bullish trend, you look for what? Low of the week. Simple. Right? But I didn't give you guys USD CAD as part of the things we are trading. But if you are trading USD CAD, you simply come here. This is Monday. This is Tuesday. This is Wednesday. No low of the week. No trade. If you are trading the other strategy, yes, you get a trade for a buy. You get a trade for a buy. This is RCE. You get a trade for a buy. You get a trade for a buy. You get a trade for a buy, but you will not have entered here. No setup. Time zone. This is another buy. You make your money. What about USD Chef? USD Chef, again, our method, USD Chef, we're in a buy. Come back to USD Chef on this day, week, Monday, Tuesday. Oh, Wednesday we had low of the week. But it didn't give us our setup, unfortunately. If you take here, you will not get RCE. If you do here, you get RCE. Takes Asia, comes back low, give you a RCE. That is your trade. That's your trade. See that? Takes out Asia, comes back to RCE here. You enter, boom. You're in TP2 right now. Only after I took out the weekly low. Only after. And within your Q zone. USD JPY. What's USD JPY telling us? Buy that, buy. So come back again. Here we are. No trade for us. Right? This is Friday, I believe. This thing is not updating. What happened? This 30th September here. Something seems to be happening. It's not pumping. So this Friday, yeah, this is Monday, low of the week. You didn't take it. No trade. If you trade the other one, yeah, you got a buy here. You get a buy here, fail, no buy, no buy. You get a buy here, small money. But I told you guys don't trade UJ. That's because. So which other USD pair again? Basically, that is it. USD, CAD, USDF, UJ. That's all. Then if you want to monitor your dollar itself, you look for dollar itself. Where are you, dollar? Okay, that's it. Again. You want to buy only when it has formed low of the week. So guys, that is it. Next week we'll meet again and look at the new strategy.